Hi, this is Sunny Harris. Good afternoon. It's only 3 o'clock here, 6 o'clock to the rest of everybody, I guess. So today we're going to talk about maximizing profits with moving averages. I'm going to show you how, regardless of time frame or symbol, moving averages work, including my own proprietary moving average. First, we need to know that I am not promoting buying or selling stocks or futures of any kind or options, and that you need to only trade with money that you can afford to lose. This is my website, moneymentor.com, and you can see all the resources up here above. You can pull down to any one of these that has a little arrow thing on it. And if you want to go there after the presentation, I would be posting my slides in the membership area. So you go up to membership. If you're already a member, you just log in. And if you're not, then you can join as a member. And I have a new podcast called The Sunny Harris Show. It's on Spotify. You can look up The Sunny Harris Show, or you can go to my Money Mentor site and /podcast.html and get the podcast link that way. Sam Tennis and I are doing it together. Sam and I are almost done writing what is my 7th book, his 2nd, and I'll tell you about that in a minute. But so we have joined together to do this podcast, and the idea is to bring famous traders, authors, and gurus to you so you can get to know them personally. I am a professional trader, mathematician, programmer, and Sam is a professional programmer. In fact, he is the originator of the TradeStation concepts and known worldwide as Mr. Easy Language. He's the easy language professional. We've got 70 people on our potential interview list, and we're going to be asking them difficult questions about their lives, their ideas, and what they think of the markets, how they got started, all that kind of stuff. Episode number 1 is already posted. It's the introduction to me and Sam. Episode number 2 is going to be featuring Tim Slater of CompuTrack and Tag Seminars fame. So please tell all your trading buddies, and we will continue doing it for a long, long time if we get a following. The first thing I'm going to show you is my dynamic moving average. And this is one of the things I use to trade, and you'll see it looks kind of funny. It gets closer together and farther apart here and closer together. And you can see it turns with the actual market moves. Whereas other indicators, other moving averages will whipsaw, especially during periods like this. You can see my mouse. So in the center there, and then again over here during whipsaw times, you don't lose all your money. And then around that, I put 2 bands, 2 sets of bands, upper outer, lower outer, and you can see that price gyrates from up to low, from down to the low, up again to the band, down to the low, up to the high, down to the middle, over and over and over again. I'll be telling you about this later, but when it's flat like that, that's a no action sort of thing. You don't want to take action while the DMA is flat. Today, we're going to compare and contrast simple moving averages, exponential moving averages, Bollinger bands, Keltner channels, and my SunnyBands indicator, and to find out where the profits are. I've been trading for 41 years. I've developed strategies, of course, for myself and for clients who've paid me up to $50,000 each to develop their systems. But then others pay as little as $19.95. So it depends on what you want. And more importantly than developing the strategies, I've developed testing methodologies that stood the test of time and in fact have become the de facto standard in the trading community. So I'm going to share with you some of my more profitable trading concepts at the end and some of my proprietary indicators. Let's see. I have 3 degrees in mathematics and 1 in film and photography. Photography is my passion, next to teaching new traders how to trade and helping intermediate traders become better traders. I've been trading for 41 years, since 1981. Twice I was rated #1 trader by Start Research, not trading options. I've been doing research and programming and testing since 1981 also, and teaching others to trade since 1986. So I'm not just a programmer, I'm a full-time trader who programs. And of course, the podcast, Sunny Harris Show. Please look it up. I've written a few books. This is my 7th. Trading 101, Trading 102, Electronic Day Trading 101, Getting Started in Trading, TradeStation Made Easy, and the new one, Easy Language OOEL Made Easy. It's about 1,200 pages, comes in 2 volumes. I also write another book. You ask, that's only 6. What happened to the 7th? Well, I wrote a book called Going Vegan with my friend, the actress Linda Blair. So that's my other book, Why I Can Count to 7. I'm also working with Sam on grading the gurus. So here are the book covers. So you'll see them and recognize them. And there's the last one, Easy Language Object-Oriented Programming Made Easy, which I call the OOEL book. Oops, the market's opening. So if you want to see where I've appeared in the past in presentations, you can look at a list of my published articles. They're extensive. Just go to moneymentor.com, click on About, and then Appearances, and you'll see sort of a videography of my work. So now we're going to talk about how to make money trading, the steps that it takes, the indicators, and the strategy that I use. It's important that you set goals. If you don't have a plan, you plan to fail. Not everyone can trade the same system. For instance, well, what's good for the goose is not necessarily good for the gander. For instance, I like 1-minute bars and you might like daily bars. You might not want to sit in front of the computer all day long like I love to. Your system must be configured for your personality, not mine. You know, if you like 15-minute bars or if you like weekly bars, we have to adjust that so that it fits your personality. So how do you find which time frame you like? Well, first you have to find the right instrument. So I specialize in the S&P. I used to trade the big boy, which was $50,000 margin at the time, and I would trade 20 contracts at a time, which takes nerves of steel. So that's the thing I've specialized in, but I also swing trade stocks, and I have some Ethereum. So I'm doing a little trading in the cryptos and doing well, in fact, in that. Bonds typically have a rhythm of 45-minute swings. I don't know why, I just know what. The S&P swings with a rhythm of 15 minutes. Currencies generally swing on a daily chart, although currencies tend to trend a lot. And stocks swing on a daily chart as well. Mutual funds, though, swing on a weekly chart. So depending on what you're looking at, you would want to look at a different time frame chart and find the rhythm that's right for you. So here, for instance, is a chart of Ethereum. This is last night's close, I think. So you can see the cycles, how they hit these lows and highs and lows again perfectly. So you have to look at what is the half-life of that cycle and look at that for your trading plan. This is SPY, which is the ETF of the S&P 500, and it has a different cycle. You can see this is almost every a little more than every 2 months, a cycle on there. While this one is US bonds, and you can see a different cycle for the bonds. They tend to gyrate more. That's why I look at a 45-minute chart for bonds. So be sure that you don't try to tell the market what you want to trade. Let the market tell you. You need to know where the money is. And I'll show you an indicator I use in a little bit to tell you where I find the money or how I find the money. So I start with screening the larger markets like the Dow or the S&P or the NASDAQ, or the Russell 2000. I do have a TradeStation does not have the Russell 2000 symbols in it. I happen to have that. If you want it, I'll make it available to you for free. Just either give me a call, the number's at the end, or you can email me, Sunny@moneymentor.com, or you can go onto my website and enter comments, and you can shoot me a little email through the comments that tells me what you want. So if you want Russell 2000 symbols, then just put Russell 2000 symbols in the comment. So what you really have to do is look at your time frame and at the universe of symbols. And at the same time, consider time frame. You must consider your own personality. For instance, I have clients who only want to trade in the first 2 hours. That's reasonable. That fits their personality. Who only want to trade near the close. That also is a good, especially if you're trading day bars, that makes sense. And who I have others who want to place a trade and walk away. They want to trade for 10 minutes a day, placing a trade and then coming back the next day to look at it again. I also have clients who do mutual fund switching. So there's all kinds of things that you can do. In fact, I've taught thousands of students to trade, and no two of them have ever come up with the same idea of how to trade the markets. But you must consider when you're trading that you have to look at everything at once. There's a lot of information coming at you in the market. You've got to consider your time frame, your time constraints, the universal symbols, and you need to ask yourself, where's the money? That's the most important question. There's only one reason to trade in my book, and that is to make money. People who are trading for the excitement or the challenge or the power play usually don't make money. So where is the action? What's happening in which symbol and in which time frame? And my favorite question is, what is true? And I'll show you how I answer that with my PHW indicator in just a few minutes. Here's a scan that I use. This is the all over the 3 moving averages, and they are 20, 50, and 200-day moving averages. So I scanned last night for this. And you can see that all these symbols are still bullish, and that only goes to H. You can see there's more room on the downside here that you can see more symbols. So we're going to look today first at ACHC, whatever that is, I don't know. But we're going to take a look at that and see what the indicators say about it. So here's the 3 lines, 200, 50, and 20-day moving averages, and they're labeled so you can, for ease of use reading. And you see, sure enough, as of last night, it was above all 3 moving averages. And that's why it comes up true in the scan. And if you want that scan, by the way, that's available for free too. I'll be happy to set it up for you if you want to give me a call. My number's at the end. Let's look at the standard moving average, ACHC again, the same chart. And we're looking at a standard moving average, 2 lines, which are 9 and 18. So the 9 moving average and the 18 moving average, it's in all the software. You can see that easily. First, we're going to look at price crossing the moving average. So you can see I put arrows at every place that you would take a trade with price crossing moving average. And there's the strategy performance report. That's just the equity curve for that particular symbol in that time frame. If you optimize and use the crossovers, you get different values. But you can see here, see this red line? That means that was a loss. This red line means that was a loss. This cyan line means that that was a winning trade. So all the red ones you see are losses. So getting in at the top doesn't look so good. I'd rather get in at the top here and write it down to there. And I'll show you how to do that in a few minutes. Than to get in near the top and write it all the way down to here. But that's the optimized moving average crossover, which speaks to why optimization isn't always a good idea. But the equity curve for it looks pretty good. On the left, you'll see it's flat forever, and that's because the price was flat at that point, and there wasn't much trading that you could Let's try now an exponential moving average. Same idea, only this, you can see an exponential moving average is much faster than a simple moving average. But at the same time, you see right here, here, and here, it crosses over several times. Cross over here again. So there's a lot of whipsaw with exponential moving averages. And there's the performance on that one. It does relatively well for a while, makes 3,000. The simple made 10,000 optimized. This makes 3,000 and then loses it all. So that happens too. If we optimize it, then we get still more red lines, but it does make money. So it did really well, lost some money, made a new high in equity, and then lost back down to under 5,000. That's not so good yet either. I don't remember, a long time. I don't remember how many years that was, but it was a long time. These are Bollinger Bands, and John Bollinger calculates this gray line in the middle is an exponential moving average. And you know what I said about whipsaws with that. The red line is his bottom band, and the blue line, pardon me, is his top band on that. I'm going to take a drink of tea, excuse me. Okay, much better. So here's the Bollinger Band strategy. Let's put that on. And it actually looks pretty decent. We've got some more blue or cyan lines there. And we're getting in closer to tops and bottoms, which is nice. But what's the problem? Well, one, you buy over here, it rides up to the band, and then way down again, you get scared to death down there before you get out here. This doesn't look like something one would want to sit long in for very long. And the performance chart is mostly underwater. Now, I didn't optimize that one, but let's look at a Keltner channel. It also is based, it looks a lot like Bollinger Bands, and it's also based on an exponential moving average. The gray line in the center is an exponential moving average. Again, the problem with exponential moving averages is the whipsaw. And instead of using standard deviation, which is what John uses for his Bollinger Bands, we see that this one is based on average true ranges above and below the exponential moving average. That's a move in the right direction, but it's still not right because we're still using an exponential moving average as the basis for it. Let's look at the Keltner channel strategy. This is just a canned strategy that's in most software. And I use TradeStation, so it's in there. Here again, we buy at the top and sell at the bottom. Buy at the top, sell at the bottom. That's the other way around from what it should be. Maybe we could just reverse it and say buy when we meant sell and sell when we meant buy. And there's the below water equity on that one, down about $3 grand by the end. So that's not what we want either. And here on the same symbol is my moving average. This is the dynamic moving average. And I've got some pretty intense mathematics in there that gives me this long cyan line from there all the way up to there. I got short over here in the COVID crash. And I'll show you how I got out at the bottom there when I show you SunnyBands. But that's what we want to see. We want to in short at this point. So you do want to see longer term, larger wins and smaller losses. So that's what the equity curve looks like on that one. Now I'm going to show you SunnyBands. These green and dark cyan lines, or teal, are my SunnyBands, and they look hard to read because it's all squished together there. But you can see the yellow dots. I told you I would tell you about my PHW indicator, and there it is. The yellow dots, PHW stands for potential hourly wage. So it marks the perfect highs and perfect lows to get in and out of every trade, so you maximize your profit. And the dynamic moving average is in the middle. Again, that's proprietary mathematics. And the green and teal lines, top and bottom, are the teal one is 1.2 average true ranges away from my DMA. And the dark green one is 2.0 average true ranges away. And you can see real easily, this is Tesla, it's not AHC. But you can see easily when it touches the bottom band, it goes back to the top band, back to the bottom band, back to the top band. Again, it goes back to the bottom band. Now here's a special case. It goes sideways right here. The DMA is going sideways. When that's going sideways, I know it's not going to come to the upper band. It's going to bounce on that sideways DMA, go back down again. Here, it blasts through it, touches the upper band, goes back down to the bottom. It's just like clockwork, goes top to bottom, over and over again. And that's what I use to trade. Let's look at SunnyBands versus the Keltner channel. Yeah, they're all kind of similar, but I don't use an exponential moving average. I use one that is calculating special mathematics so it doesn't whipsaw. And Keltner bands, as I said, are based on exponential moving averages, which by their very nature have lots of whipsaw. So Keltner channels, let's look at something else here. This is a chart with SunnyBars on it. Of course, I name everything Sunny. And you'll see that the width of this bar is in direct relation to the height of this volume chart on the bottom. So the higher the volume, the wider the bar. And you'll see here's an arrow of bars. There's a medium width bar. Here's a medium width bar up here at the top. And I can read volume so easily just by looking at my chart. I don't have to look down at the volume. I like charts that tell me lots without me having to think very much, because when I'm trading a 1 or a 5 minute chart, I don't have time to think about what my chart's telling me and analyze it before I make a trade. I've got to look at that chart and instantly make a decision. There's a lot of data coming at me. I look up more things than this on the chart. And if you're curious about it, give me a call. I'll tell you all the things I'm looking at and even give you trials of my indicators if you're interested in that, if you have TradeStation or multi-charts. But this is SunnyBars, and it shows you the volume in a real easy to read format. You'll see the SunnyBands also tell you the values. So the green is for the green outer band. Teal is for the upper inner band. It tells you that the crossover was gold on top. So when the gold line is on top on my dynamic moving average, that's generally bullish. And when the purple line back over here is on top, that's generally bearish. Now it doesn't signal quite as fast as the SunnyBands does. So I would know right back here to get long on the SunnyBands. And that's before this DMA crosses over. And that's why I came up with SunnyBands, because actually when I was rated #1 trader those 2 years, I was just using the DMA crossovers on a 15-minute chart of the SBars. So I wanted to be able to get in sooner because I could see that the ideal bottom is over in here someplace. And then I came up with SunnyBands and I realized that it touches the bottom and goes to the top. Here the DMA is flat. It's only going to go to the midline. There it is again, bouncing up to the top. These bars are not red. I'm waiting for a red bar. So there is where I would go short. Okay, so while you're researching and also while you're trading, always be asking what is true. If you look at your chart, say what is true on this chart. If you put a moving average on there, say what is true of the perfect tops and bottoms with relationship to this indicator. RSI, stochastics, MACD, anything you put on there, and I've tested them all. I have 8 bankers boxes full of my research from years ago when I was still researching my strategy. Now I don't need to research it anymore. I just trade it. So what is true? What's happening on the chart? How far is the current market moving? Now I know that the market moves between the top band and the lower band. Let me go back a second. See here the outer top bands up here at 141 on this chart. The outer bottom bands at 140.7. And it tells me where's the diff. The diff of the outer bands is 0.3. So I know that the chances are it's going to move from here to here, only 0.3. This is, I don't even remember what this is, but it's some kind of stock that doesn't trade in the thousands like I'm accustomed to. But I know that when I get 100 shares at 0.3, I've got some money in there, take it, right? So it gives me these values. And it also tells me the angle. And since it's gray, it tells me the angle is flat at 0.24. So it's gray, and I know that's flat. Chances are it's not going to go any higher than that. So always be asking, how far is it moving? And that's what the difference between the upper and the lower bands tell me. What happens when the band is touched? Well, we know. If it comes down on a blue or green bar, I use blue typically now. So when it comes down on the blue bar and turns red, it's going to be a long trade. When it goes up on a blue bar and turns red, I'm sorry, I said that the other way. When it comes down on red bars and turns blue, it's going back up. When it goes up on blue bars and turns down on a red, then it's going to go down. So I go short. And if the DMA is moving sideways, we know that it's stagnated, and it's more than likely going to stop at that midline. I also look at a 15-minute chart and a 1-minute chart together. So the 15 minutes is going to tell me direction, and the 1 minute is going to tell me where to enter. And if there's only $1, take it. Don't try to tell the market where it's going to go. If it was 0.3, like we saw on the other chart, take it. That's the value. That's the difference between the bands. You'll never be able to tell the market where to go. And the diff is the difference between the bands. So here you see diff is 0.81 on this chart, goes down, comes back and turns green, goes up to the top, over and over and over again, up and down to these bands. You'd think somebody else was using SunnyBands besides me. Well, there are a few. I have a few customers who have it, but I limit the number of sales that I make so that there aren't too many people doing the same thing and interfering with my trading. So you read the SunnyBands values from the right-hand edge, and there they are: angle, diff inner, diff outer, top band, lower band, and the crossover shows in gold if gold's on top. If purple's on top, this text would be purple. And again, that's for my ease of use so that I can see quickly what's going on. It works on any time frame. There's a 1-minute chart, and I color, this is an indicator of mine that I call day sessions. So the day session is here, green and red, and the night session is magenta and teal. So I can, at a glance, once again, I want to do it as quickly as I can. I know which session I'm in. I know that typically the night session gets very dull right after the close. That's a 1-minute chart, so that's only maybe 15 minutes or so. But it makes it real easy for me to know what to do. Here it is on a 5-minute chart. Same idea. As long as it's above that gold DMA, look at this. It just stays long this whole time. It's above the gold. Gold's on top. Crossover's gold at 540. This is a 15-minute chart. Same stuff. Night session, day session. Right, there we go, right up to that upper band, On this particular chart, I wouldn't go short until it goes below the upper band on a red candle. This is same thing exactly on a 30-minute chart. So you can see this thing works. And there the DMA's flat, so it's only going to go up to there, comes back down to the inner band, not the outer band, bounces again, fails, and here we go. So I do take the signal from the longer and the entry from a shorter time frame, and I'll show you in just a minute how I combine those two on one chart to make the reading of it really easy. I don't like to think about things. So here they are. The darker green is the 1 minute SunnyBands. Same chart we've been looking at all along. So darker green's the 1 minute, and this light green is SunnyBands on a 5 minute chart. So you'll see that SunnyBands follow the same idea as price. When the SunnyBands touches the outer, when the 1 minute SunnyBands touches the 5 minute SunnyBands, we're going to go the other direction. So I like to watch 2 time frames on one chart. So I overlay them like that. If you want to know how to do that, you can go to my YouTube channel. There's a little video there explaining how to do it. Now I've got a long set of rules, but they're really actually very simple. I take the setup from the 15 and 30 minute charts. I take entries from 1 and 5 minute charts. I enter long when the long-term chart is red or magenta and below the lower SunnyBand. And the short-term chart is also red and below the lower SunnyBand. I take profit when an attractor is reached. And I haven't told you yet what an attractor is, but I draw horizontal lines at the preponderance of price. So when I see a price, an area where price hits and hits and hits again, then I'll draw an attractor. I also call moving averages attractors because price tends to revert to the mean. So price will come back and touch the moving average. I also call pennant formations attractors. You can see that the price will be stuck within a pennant and then it will go to the outside of the pennant and break out, either higher or lower. So I take profit when an attractor is reached, another attractor that's really powerful is the VWAP. I don't know if you know what that is, but VWAP is volume weighted average price. So it gives you an average of the price that's weighted by the volume, so that the more volume that there is, the more it influences that indicator. So I take profit when an attractor is reached or when the upper SunnyBand on the lower long-term chart is penetrated upward and then back down on a red bar. When the DMA is long, that means gold is on top. The bias is to the upside. So I don't expect a short trade to drop further than the midline when the bias is long. Gold on top. If the DMA is flat, then I stay with the first entry until the flat period until the DMA finds a direction. Oh, this reminds me, I have a newsletter called Sunny Side of the Street that I put out every Sunday night. It's free. If you go to moneymentor.com, you can sign up as a member and you'll get Sunny Side of the Street for free. And I do use my indicators in there to analyze several stocks, the Dow, the E-mini, gold, oil, bonds, and Bitcoin. So that's free. If you'd like to go to moneymentor.com, you can sign up for that as a member. When I get a short signal, which would be the blue or green going up, turns red below the band, and the blue or green continues on up, then I reverse and go long because this is likely a strong move. So I rely on price action also. If price reverses, I'm not going to hold on to something that's in the wrong direction. Opposite of that, of course, is true for shorts. Wait for it. Wait for price to confirm. Wait for it to move in the expected direction by a tick or two at least. I have my strategy set to 1 tick for longs and 4 ticks for shorts. And remember, there's always another trade. Well, I caught the crash of 87 when that dropped dramatically. And at that time, I thought, well, that's probably the last time that'll ever happen in the world. And of course, it's happened over and over again. I was a young trader then. So there's always another trade. But do take your losses fast. Don't sit in a trade. If you sit in a trade that's losing, you're an investor, not a trader. Wait for correspondence in the charts. So here I've got them separated, 1 minute and 5 minute. You see how much easier it is to look at it when the 1 minute's overlaid on the 5 minute? Here's an actual trading day. You can see this is the 1 minute E-mini S&P. And watch this little, there's my bean ticks indicator telling me bing, bing means it's going up. If it makes a bong sound, it's going down. So that's what it looks like on a matrix. It got a lot more than that over time, but that's the beginning of it. Here's an example of a strong up move. You see how that comes down below the sunny band, back up again, and just keeps going up, 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 hits the midline, keeps going up. And now we're into DMA's flat, so we're in congestion. You can take profits there, but I would not go short because the DMA's flat. Wait till it comes down further than that. Here's the sunny bars again, and I'm going to show you a real quick little transition. That's July 4th. You see the next bar is up from there. Next bar is up even more. And we've got a red bar that penetrates the upper sunny band. I'm out. So it went from here to here, and I'm out. Look at the next bar. Aha. Dramatic. Good thing we knew to get out. And then it goes on down to there. So I told you about sunny bars already with the volume shown in the width of the bar. And it works on, of course, works on any time frame. You don't have to put volume on your chart. It's right there in front of you. Session bars they can be set to any open and close times. If you're trading stocks and you want to set them at 1:15 California time instead of 2 o'clock, which is when the E-mini closes for an hour, you can set them to any open and close times, and they'll paint the colors different for you. So attractors, I mentioned those a minute ago. They're support, resistance, pennants, moving averages, congestion areas, and I draw them, and then I set alerts on the either trend lines or horizontal lines. I set alerts on them, so I get a little box that pops up to tell me that an alert has occurred, and you can click on it. It'll take you right to the chart that it happened on. Here's some attractors on a 1-minute chart. You can see preponderance of price there. Price hits over and over again right here. It hits even back there. That's probably where I drew the line from. Back here, here, and here, and here again. Once it breaks it, it's on down. Likewise, here's 2 bars that it hits over here, hits twice here. So we draw a horizontal line across. Breaks it, we're going on down. Here they are on a daily chart. You can see comes down, hits the attractor, goes up to this attractor, back down again. So we play attractors over and over again. Here's pennants. I have an indicator that automatically draws pennants on the chart. Excuse that ring. Nothing I can do about it. It's on the computer. Here we have pennants that draw automatically, so you can see these formations. And then I draw attractors, these orange horizontal lines, on the tops and bottoms of the pennants, here and here. And you can see when it breaks out, it goes up. When it breaks the bottom, when it goes down. So where's the market going? What are we doing now? Let's look at the daily Dow. This blue line right here is 10% down, and you can see, now this is last night again. I don't have a chart for today yet to tell me what happened, but you can see that we were below the 10% line. I have an attractor drawn here, kind of magenta looking or reddish magenta line goes across there. It shows me the attractor at these prices. And then this bottom one is 15% down. So I can see where the bad targets are and see where the market might go. And I think we're probably going to go lower. I don't know because, oh, I didn't tell you about this DME histogram. This colorful chart at the bottom measures the difference between the dynamic moving averages, the gold and the purple. So you can see when it's red, well, let's do this. When it's gold, that means that gold's on top. And it turns red, that means gold's still on top, but it's going down. Now purple's on top. And when it turns green, tells me purple was on top, but it's going up. So the mix of colors tells me the transition of the difference between the two DMA lines. Here, let's look at %R, which is Larry Williams indicator, but it's been smoothed with my smoothing function, which is the same smoothing function that I use to smooth my dynamic moving average out. And I have it for RSI and %R and ADX all, because I find them much more accurate and much easier to read if they've been smoothed. Here is the Dow on a monthly basis, and that 10% down doesn't look so bad if you look at it on a monthly chart, does it? Chances are, since it went up above the outer band and turned red and came back down, but gold is still on top there, see? So it could just hit that and bounce on up, and the DMA is flat, so it could hit that and bounce, which is quite possible it would do, or it could penetrate it. If it does, it's going down to one of these, either the inner or the outer lower bands. These numbers are the 20, 50, and 200 moving average. So they're weeks at this point. 50 weeks is a year. So we're looking at this gold line being right down here. See the dotted line right there? 50 weeks. So that's a year's moving average. I'd kind of be surprised if it goes down much further, but it's certainly possible. And you can see that the %R is up above, and is moving down. If it doesn't go any further, then we're possibly looking at a divergence there. This is something I just want to show you because it's really cool. This is Advanced Gap, Tom Joseph's program by eSignal. You can subscribe to eSignal and get the Elliott waves counted automatically through it. I think it's elegant. 1, 2, 3, 4, 5, ABC. Makes it just so easy to see the Elliott waves. So don't forget TradeStation Made Easy. That's my book. And the new one comes in 2 volumes, the programming manual and the reference guide. That should be out at the end of April. The Sunny Harris Show, here's the link to Spotify, or you can go to moneymentor.com/podcast, and you can see that. And I'm going to show you some of today's charts. This was Bitcoin. What's happening here? The DMA is flat, 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 flat. Slightly pointing down here. It's curving down just a little bit. It touched the inner band on a flat DMA. Tells me it's going to go up at least to 44,500, which is this inner upper band, how do I say it? Upper inner band. So it could go up to that upper inner band, which is about 44,500. We're down at 38,000 at that point, 980. Oh, and I've got my yellow PHW dots on there. You can see the perfect turning points. This histogram down here at the bottom measures how many dollars are in the move. So it always shows prior move because you don't know the result to the end of the dot. So this was $140,000 profit potential from there to there on one Bitcoin contract. This little move from there to there didn't do so well compared to that. But here we see $100,000 profit. Here's $58,000 profit. So this tells me what kind of, I guess it's an average true range to profit, actually. So it's looking at the profit potential. On the bottom, you see purple and gold dots. That's my who's on top. So I can just quickly identify where the purple's on top or gold's on top. And you can see it's difficult if you look at this DMA and the SunnyBands. It's difficult to tell who's on top there. So that just tells me at a glance. Again, I like everything at a glance. Here's Ethereum, same story. Sideways DMA. Price is going down to the inner, probably going to go up to the outer now. Microsoft, not quite the same story. You can see how this one's sloping down. probably going on down as it comes up, touches the midline, purple's on top, drops to this, barely makes it back up. I wouldn't be surprised to see that go down further. Oh, here's Vantage Point software. Now I post this Vantage Point prediction every day on my website, moneymentor.com. And you can get it for free, or you can buy it from Vantage Point by clicking on this link up here. There's a free little webinar kind of thing that tells you how to use it and what it's good for. But you can see this view is of their predictions, so that you can see that their predictions pretty much fall. I mean, the actual prices, sorry, pretty much fall right within the predicted values. See that? That's really amazing. I did an extensive research project on Vantage Point at one point, and found them to be 80% correct 80% of the time, which is a really good average. So I do post it on Money Mentor every day. And I also post it in my Sunday night free Sunny Side of the Street newsletter. So if you want to get that for free, there's 2 ways to do it there. This is Amazon, which is the most tradable of the stocks. I use my PHW in a radar screen window to scan for stocks. And Amazon just goes up and down, up and down, up and down for the most part. So there's lots of room to trade. It's not as wonderful as an investment as it is as a tradable. They just announced today that they're going, I think they said May, they're going to split 20 for 1. So there's going to be a lot of interest in it. In fact, you look at this last bar, see where it jumped up to today, jumped right up to the midline based on that split announcement. So everybody's going to try to get 20 for 1 of their stocks. So you buy 1 share at 2,900 and you get 20 shares instead at, what would that be? 1.8 something, $180. Here's Tesla. I believe in Tesla. I've got a lot of shares of Tesla. If you look across here, you see an attractor. See, as that goes across like that, that's support from way back here. Again, you can see the volume. You can see that green is evident on the DMA histogram. Even though purple's on top, it's showing green, which means that it's just about time to go long there. Here's the PHW lower, again, tells me there's $321 in the last trade. Crude went up, 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 hit $131 and moved back down today. Who knows what the embargo on Russian oil is going to do to the price of it. But we didn't order that much of it in the first place. Some estimates say 3% of our oil came from Russia. Some estimates say 8% came from Russia, but we shall see. And frankly, I'm so in support of the Ukrainian people that I don't care if I pay $10 a gallon at the pump, which in California is quite possible because right now it's $6. I stand in support of Ukraine. Here's gold. You see, I've been predicting for months and months that it would hit 2,000, and I had a lot of people disagreeing with me. But here it was today, over 2,046, and currently down just over 2,000. I still expect higher prices in gold. And you can see that who's on top, gold line's on top solidly there. Here, T-bonds. So you can see that they've backed off. They went up quite a few days in a row there. Here's where we entered. Over here as it went red down and then we went up. So we entered here, touched there, went back on red. So we get out, take profits. And now it's gone down. Price goes down, yield goes up. Today we had a big CPI number. That influenced this, I'm certain. So yeah, I'm almost done. Do we have any questions? Let's see where the chat room is. Here we go. Do we have any questions at all? Is anybody still here?
I'm not seeing any questions. right now.
Okie doke.
But if anyone has any, go ahead and type them in.
So I'm going to put up my special then and tell you what my offer is. Now, I don't ever get discounts, hardly ever. So today, just for this webinar, I'm offering all my products, and that includes my consulting. Does not include the books, however, at 30% discount. So moneymentor.com until the end of this month, 30% off on anything that you want to purchase, license. I once a year I offer a 50% discount in October for a week, but other than that, I don't discount things. Thanks to everybody who attended. I really appreciate it. I love working with new traders and traders who want to make more money than they're currently making or who have gotten frustrated with their own trading. Give me a call. We'll just visit for a while. There's my cell phone. Remember that I'm on the West Coast. I don't answer calls earlier than 6 a.m. And that's it in a nutshell. There's my phone, my Skype, my fax, and there's the email. Thank you so much. Thank you, David. Thank you, Anka.